So students, here is the next problem number 21st. So question is, Ram Traders of Ludhiana consigned 100 computers costing 20,000 each to Bahadur of Gawatti at 10% above the cost. So what they are saying, Ram Traders is sending the goods worth of, that is 100 computer goods, 100 computers, is sending 100 computers costing 20,000 each to Bahadur of Gawatti. So here the Ram is the consigner, so this Bahadur is the consignee. He is sending 100 computers at the cost price of 20,000. Cost price means that is a manufacturing price of 20,000. So at 10% above the cost, and you also given the percentage of profit which you have been incurred. So which is supposed to, is saying that on 20,000 10% of profit has been put on that invoice. So 10% is the profit on cost. So Ram Traders incurred 500 for packing and other charges on each computer. So he has incurred, Ram Traders' consigners have incurred 500 rupees for packing and other charges of each computers. So for each computer it is 500 rupees. So he has sent 100 computers. So 500 into 100, 50,000 is the freight charges. Sorry, packing and other charges is 50,000. So next, consignee received the consignment by paying 1,500 for railway charges. So he has paid 1,500 for railway charges. Who has paid? Consignee. So this is non-recurring expenses. And 1,300 for insurance till it reaches the go down. So one thing here is, so if the consignee has paid anything for insurance means we were recording that as recurring expenses. So here the consignee has paid 1,300 for insurance till it reaches the go down means that is the insurance of transit. If consignee has incurred any insurance, if the consignee has taken any insurance for a particular goods on transit means that will be recorded as non-recurring expenses. If he buys the insurance, simply if he buys a go down insurance means that will not be considering, but this insurance it is to reach till the go down. So that means it is a transit insurance, so it will be recorded as non-recurring expenses. And 2,000 for carriage, even the carriage is non-recurring expenses. Next, he submitted on account sale as follows. So he has sold 20,000 computers at 25,000 each for cash, and 50 computers sold on credit at 30,000 each, and 10 taken for his own stock at 25,000 each. So this is all considered as sale value. Even if he has taken for own purpose also, he is supposed to pay the cash, then that will be recorded as an sales itself. Next is, consignee remitted the balance after deducting his commission at 10% of sales. So he has also received he is entitled for 10% of commission, assuming the virginal entries are made at invoice price. So he is saying the virginal entries are made at invoice price, that is cost plus profit price. Virginal entries are made at invoice price, that is cost plus profit price means, so the proforma which is sending to consignee, this consigner is sending the proforma to consignee at an invoice price, that is cost plus profit price, and consignment stock is valued at invoice price, and even the consignment stock is valued at invoice price. Write necessary ledger in the books of Ram Traders. Done. So this is about the question. So next, coming on to the given things, what and all they were given. So next, consigner is Ram Traders, consignee is Bahadur. So what he has consigned? He has consigned 100 computers. Cost price is 20,000 each. To produce one computer it costs 20,000 rupees. So that is manufacturing price. So he is sending the proforma, he is sending the receipt saying that is on 10% profit. He has been said that there is a 10. He is not said to the consignee, but he has added 10% profit to this 20,000 and sent it to the consignee. So he is not sending the goods on 20,000 saying that each goods cost 20,000. He is sending the goods saying that each goods cost 20,000 plus 10% profit on that. So next, consigner's expenses 500 as packing and other charges for each computer, that is 500 is the packing or other charges. How much is the value of computers sent? That is 100. So next, the value of that is 50,000. So that is a non-recurring expenses. Next, consignee expenses 1,500 as railway charges. Non-recurring expenses 1,300 as insurance, that is also non-recurring expenses. This you should see properly. Insurance for go down or any other purpose will be considered as recurring, but here the insurance which has been taken is for the purpose of transit, so it will be recorded as non-recurring. So next is 20, that is 200 rupees for carriage, which is that is also the non-recurring expenses. Next, coming on to the sales. So yes, sold 20 computers at 25,000 each. So 20 into 25,000, 5 lakh. Next, 50 computers and 50 computers at 30,000 each on credit. That is also the sale. 50,000 into 30,000, 15 lakh. And he has taken 10 computers for his own use at 25,000 each. 10,000 into 25,000, that is 10 into 25,000, that will be 2,50,000. The total sales is 22,50,000. Next, commission is 10% on sales. Sales is 22,50,000 multiplied by 10%, 2,25,000 is the commission payable to the consignee. So here we are supposed to calculate what is the profit and it is invoice price. They are given the cost price of each computer, that is 20,000. They are not given that is invoice price. They only said 10% of profit. So we are supposed to calculate what is the invoice price for each computers. So we are supposed to calculate invoice price. Invoice price formula is cost plus profit. So cost of each computer, what is the cost of each computer for manufacturing? That is 20,000. So profit on that has been added is 10%. So 20,000 into 10%, 2,000. So 20,000 plus 2,000 is 22,000 is the invoice price of each computer. So we will be recording in everything it has been recorded everything in this profit price itself, that is 22,000. Next, coming on to load, that is profit. So what is the profit he has been adding? That is invoice price minus cost price. So 22,000 is the invoice price minus cost price is 20,000. So 2,000 is the profit. So you have been understood this much, I guess. So next, coming on to what you are supposed to calculate, that is closing stock. We are supposed to calculate the closing stock. So what we will be entering here? So first thing is calculation of closing stock, value of closing stock, goods sent on consignment. So how many goods has been sending? 100 computers multiplied by, we will be taking the invoice price. So what is the invoice price? We have calculated invoice price, that is 22,000. So that is 100 into 22,000. So that will be 100 is the units, 22 lakh is the price, that is invoice price. Hope you have been understood with this. Next is non-recurring expenses of consignor. So what is the non-recurring expenses of consignor? That is packing and other charges, 50,000. So this is the goods in transit. So next we are supposed to, we don't have any normal and abnormal losses here, that is nil. This will be the goods received by the consignee. Next is non-recurring, we are supposed to add back non-recurring expenses of consignee. Yeah, this 3 are the non-recurring expenses. We have added this. So this will be the cost of goods in go down. There is no normal and abnormal losses in the go down. So that is nil. So this will be the goods available for sale. So value of goods available for sale. So we are supposed to calculate the unsold stock. How will we calculate the unsold stock? That is units of goods available for sale minus units sold. So how much is the units sold? So here 20, 50 and 10. So that will be 80 computers has been sold. So 80 computers has been sold. 100 minus 80 is 20 computer is unsold. So now we are supposed to calculate the value for this 20 computers. So you know the formula for calculating that. So cost of goods available for sale multiplied by unit unsold divided by units available for sale. So that will be 4,50,600. You have been understood with preparing the calculation of closing stock. So next, what you are supposed to prepare? You are supposed to prepare the consignment accounts in the books of we are supposed to prepare the ledger accounts in the books of consignor, that is Ram Traders. So consignment to consignment to Bahadur account, that is consignment account. So I want you to take your consignment account of invoice price and see what and all is there. So first thing it will be the goods return. We don't have goods return. Next is sales. Yes, sales has been recorded. Next is the profit on goods sent on consignment. Yes, there is a profit on goods sent on consignment. What is the value of goods sent on consignment? That is 100 multiplied by what is how much of the goods that has been, what is the profit on that, what is the profit that has been added to the each computer. Profit is 2000. So here 2 lakh rupees. Computers sent multiplied by profit, that is profit on goods sent on consignment. What is the percentage of profit that had been added on the each cost, each price, each value, each computer, that is 2000, that will be 2 lakh rupees. Sales recorded, this is by consignment stock account, this is the closing stock you will be recording. We have been calculated with closing stock. So this much is of credit side. So now coming on the credit side, to consignment stock account, what we have sent on the invoice price, we will be recording that. Next is bank account, expenses of consignor. Next is expenses of consignee to Bahadur's account. To Bahadur's account, expenses of commission of consignee. Next, what you are supposed to record, to stock reserve account. This is an extra thing you are supposed to see here. To stock reserve account, that is what that means there is an unsold goods, right? There is an unsold goods of 20 goods, 20 computer is unsold. Even on the 20 computer there is a profit. There is a profit on that, there is a profit price which is added to that computer also. We are supposed to write that also. So 20 is the unsold goods. What is the profit of each computer? 2000 rupees. 20 into 2000, 40,000. Next year we are supposed to see to it that is the profit on consignment or loss here. So 29,600 on each side. So credit side is higher than the debit side, that will be 3,82,600 is the profit on consignment. So next we are supposed to record Bahadur's account, that is consignee's account. So commission, that is expenses of consignee, commission of consignee, this side the sales made by the consignee. So here balancing figure 20,22,000. So next coming on to that is goods sent on consignment account. Here this also will be changing. I supposed to see to it that by here we will be writing by consignment account 22 lakh. 22 lakh is the, that is goods sent on consignment. So on the debit side, first you are supposed to write by to trading account. So if we send the goods in cost price, mean what will be the value you are supposed to write, and remaining what is the profit on that, consignment you are supposed to enter that. So here one thing I will see. If we are sent the goods at 20,000 only, for example we are sent 100 computers for 20,000 rupees, this is the cost price. If we are sent the goods on cost price itself, means it would be 20 lakh. But here extra thing, the profit of 2000 has been added, right? So you are supposed to write that is 100 into 2000, that is the profit which has been put on each computer. 100 into 2000, that is 2 lakh rupees. So hope you have been understood with this. Okay. Next coming on to last, you are supposed to, here we will be also preparing stock reserve account. You are supposed to prepare this stock reserve account. Only two things you will be recording. Stock, where is that stock reserve? Means here their consignment account on the debit side to stock reserve, that is 40,000 was there, right? So we are supposed to transfer that to the stock reserve account. So on the credit side, by consignment account, profit 40,000. What is the profit on? That is closing stock profit which was there on the closing stock 40,000, and then down the credit side balance carried down, that is 40,000 balancing figure. So it is 40 and 40,000. So hope you have been understood with this problem. Please if you have any doubt you can ask me. Thank you so much.